Capital allocation, the process by which a business determines how to allocate its financial resources to optimize shareholder value, is known as capital allocation. This entails selecting the top investment prospect and allocating the appropriate amount of fund to each. Among them are equipment capital, ingredient capital, facility setup capital, and branding and packaging capital. In the provided business plan for Sweetz cookie, capital allocation plays a critical role in launching and sustaining the business. The plan outlines specific categories and amounts needed to start the company. Costing method. Costing method, also known as business plan, is a comprehensive document that outlines the goals, strategies, and action plan of a business. It serves as a roadmap for entrepreneurs to launch, run, and grow their business. Business plan element has 4 elements that I want to highlight. Among them are common sense date, product description, capital, and employee chart. Apart from those elements, the costing method also included 2 other items, namely customer analysis and 4PS. As for the customer analysis, it is divided into 2 sections, which is selection of the product and customer analysis. Meanwhile, for 4PS, it consists of product, place, price, and profit margin.
The type of process manufacturing of Sweetz cookies is sequential processing. There are 3 processes to produce a chocolate marshmallow soft cookies. First is mixing process. Second is baking process. And third is packaging process. Based on the production record in the 3 departments, in the unit information, the total unit to account for the total unit accounted for are the same, which is 2,500 units, while the equivalent unit from material is 2,500 units and 2,150 units for conversion. In the section of cost information in mixing department, the total cost to account for and the total cost accounted for are the same, which is 42,175 ringgit, while the total cost per equivalent unit is 16 ringgit and 94 cents, which is 16 ringgit 44 cents from material and 50 cents from conversion. For cost information in baking department, the total cost to account for and the total cost accounted for are the same, which is 8,613 ringgit and 50 cents, while the total cost per equivalent unit is 3 ringgit and 50 cents, which is 3 ringgit and 11 cents from material and 39 cents from conversion. For cost information in packaging department, the total cost to account for and the total cost accounted for are the same, which is 9,788 ringgit 50 cents, while the total cost per equivalent unit is 3 ringgit and 97 cents, which is from 3 ringgit and 58 cents from the material and 39 cents from conversion.
Now I'm going to present the operating budget. The operating budget can be called as the income generating activity of a firm, such as the sales production and good inventory. The operating budget consists of a budget income statement accompanied by the following steps. First of all is the sales budget. The sales budget is approved by the budget committee and describes expected sales in unit and RM. The sales budget is the basis for all of the other operating budget and most of the financial budget. So it is important that it can be as accurate as possible. So the first step in creating sales budget is to develop the sales forecast. The sales forecast is an initial estimate and it is often adjusted by the budget committee such as the table above. So each quarter equal to 3 months to show the sales budget for 1 year. Once the sales budget has been prepared, we need to make a production budget. The production budget tells how many units must be produced to meet sales needs and to satisfy ending inventory requirement. So to compute the units to be produced, goods, unit sales and unit of a beginning and ending finished goods inventory are needed. Next is direct material purchase budget. The direct material purchase budget shows manager how much the raw must be brought to support product and ending inventory needs for materials. So the business need to be prepared a separate direct material purchase budget for every type of raw material. The total of all material purchase cost is on the table above.
The direct labor budget for Sweetz Cookies Company project production of 32140 units for the year with labor requirements of 18070 hours, labor cost at RM20 per hour, total RM361400 annually, aiding workforce planning and cost control. The ending finished good inventory budget for Sweetz Cookies Company estimates the value of unsold products at the year's end. This budget helps determine the cost of goods sold and the inventory value on the balance sheet. The total unit cost is RM65.0163, which include RM52.6013 for direct materials, RM10 for direct labor, and RM2.4105 for overhead, with an expected ending inventory of 2040 units. The total inventory value is RM132633.25. This budget accurate financial assessment of the company inventory. Sweetz Cookies Company overhead budget project RM132280 annually, comprising RM72280 in variable cost and RM6000 in fixed cost. It covers utility, rent, depreciation and supervisory salaries and adding cost management.
Next, I'm gonna present the financial income. The Sweetz Cookies Central Profit Company will have to prepare cash receipt schedule. So the company expects that on average 30% of the total sales are cash and 70% of the total sales are on credit. From the credit sales, the company expects that 90% will be paid in cash during the quarter of sales and the remaining 10% will be paid in the following quarter. The balance in the account receivable as the last quarter of previous year was 2000.
So for the next part, I'm going to talk about cash budget. The company started the year with an initial cash balance of 6,000, which steadily increased each quarter, ending the year with a cash balance of 1,17,144 ringgit 62 cents. Next, total cash sales and collection for the year were 1,228,500, contributing to total cash available of 1,980,030 ringgit and 42 cents. Major cash disbursements included raw materials 3,883 ringgit 20 cents, direct labor 361,040 ringgit, overhead 132,280 ringgit, selling and administrative expenses 22,385 ringgit, income taxes 442,938 ringgit. So, the company did not have any borrowings or repayments during the year. Overall, the cash budget shows the company was able to maintain a healthy cash position throughout the year, ending with a substantial cash balance of over 1 million ringgit.
Future planning. To ensure the successful implementation and sustainability of Sweetz Cookies business plan, we need to consider several key areas beyond financial planning. The 5 key elements that we will prioritize in future planning are operation management, product development, marketing strategies, customer engagement, and continuous improvement. All of these 5 keys play a role and have an impact on the company. Each one of them is able to help the company not only to succeed but also able to learn and master the ins and outs of business management in terms of accounting and management, as well as stabilize the movement of the company on a large, systematic, efficient, and highly competitive scale.